My name is Nick Finkenauer, and I'm a tax director at McGowan, Hearst, Clark & Smith. Today's topic of discussion is really two separate topics: meals and entertainment. The Tax Cuts and Jobs Act implemented significant changes to both of these areas and how they are taxed going forward. First, let's give a brief background on how these were taxed before the Tax Cuts and Jobs Act became law. Generally, meals and entertainment were both subject to the 50% disallowance rule. A quick example will illustrate this. If your business had $1,000 of meals and entertainment expenses, only $500 was allowed as a deduction on your tax return. How are these treated now? Let's start with the easier topic, which is entertainment. The Tax Cuts and Jobs Act disallows all entertainment expenses as a deduction. So if you have season tickets to sporting events or you take a client golfing, you are not eligible for a deduction on your tax return. It should be noted that a Christmas party, however, or other similar social events for employees are still fully deductible. Meals are a little more complicated. In general, most meals are still 50% deductible. However, there have been a few changes that will affect taxpayers. First, meals at entertainment activities are not deductible. This means that the lunch at the golf outing you took a client to is disallowed. Second, meals provided for the convenience of the employer are now 50% deductible instead of fully deductible. An example of this is a group meal provided to your employees who are working overtime. Please reach out to your tax professional at McGowan, Hearst, Clark & Smith to see how the changes to meals and entertainment deduction will impact you and what you can do right now to maximize your deductions going forward.